What is going on, guys and girls? Just on a walk with little man Beanbag. Beautiful day here in the UK. Just going to hop on something and talk about a topic that came up within our masterclass community. A student put the post in, and I just thought it was worth sharing my answer with everyone, really, because it's relevant no matter what strategy, no matter what style, however you trade the markets, whatever markets you trade, it's relevant to everyone as well. So the question, the post, it was basically around the subject of they felt as though markets were being irrational. They felt as though markets were just doing whatever they wanted. It was hard to make sense of. And what if our strategies don't work moving forward? First of all, I think this is a very irrational thought process. We've backtested the strategies and developed the strategies over backtesting tens of years. It's not something that just works in the last 12 months. It's something that you can backtest over the last 20 years, and it's going to be something that works over the long term. So first of all, that's kind of the biggest key. Let's not panic just because we've seen something that we've seen before, a 20% correction, 20% full bearish momentum in the markets. It's not something we've never seen and dealt with before. So we don't need to be thinking irrationally like that. Secondly, what I was thinking about was, to be honest, this is the main reason why markets, when we're at sort of the market phase we're at, we've been in a bullish move for now 12 years. We had no sort of strong correction before this happened, no sort of really strong pullback. So when this bearish momentum comes, it's like a self-fulfilling prophecy, because people have been waiting, people have been calling this for the last 3-4 years as we approach that 10-year mark, which you typically would expect to see a recession, a pullback, a correction, whatever you want to call it. So as soon as we start to see bearish momentum, people who are uneducated, people who are short-term traders, I don't mean that in a disrespectful way, uneducated, they will want to start pulling profits out of the market. Some people will need the capital to live off of. Some people will have fear because they rely on that pot growing for their retirement, whatever it might be. But that's where the fear comes in. And that's where we see these huge sell-offs, massive momentum. And that's why they closed Wall Street down when we gapped with such a large opening to the downside. That's why they paused trading, because they didn't want people to be trading from pure emotions, just trying to dump everything they had. Come on, buddy. Come on. The reason why this is important is as you become more educated, as you learn global macro, you'll start to realize these things are explainable. So equity markets, where we are in the cycle, where the markets currently are, price action, it was all-time highs in a lot of different countries' indexes. So it's not to be unexpected that we could see a 20% correction. Again, this has been the biggest bearish move we've had since 2008. Once it does happen, once that big bearish momentum comes in, we need to allow the markets a couple of days, a couple of weeks to recover. We can't stop all of a sudden be getting fearful and thinking our strategies aren't going to work just because we've had a big correction to the downside. We expect markets to be stalling right now, not really be doing anything, because we saw so much momentum to the downside. Will we see further downside? I personally think so in the equity markets, but at this point, they need a couple of days to breathe. They need a couple of days to develop, and then we can be looking for further opportunities. It makes sense that the equity market's gone down. Catalyst that's being used is coronavirus. The spreading of coronavirus, the impact that it's going to have on the economies in different countries. Somewhere like Italy, for example, where they've shut down. Italy's in lockdown, so they're going to have no tourists coming in. They're not going to be importing, they're not going to be exporting. So suddenly it's going to affect their economy, and all countries are going to have to deal with this. Secondly, when we sort of go into this risk-off environment, when we see equities selling off, you expect to see safe havens gain bullish momentum, and it's exactly what we're seeing. We're seeing the chuff, which is a safe haven currency. We're seeing that having a very bullish momentum. We're seeing the yen has been on a nice bullish move. We've been catching quite a few % on that throughout the beginning of this quarter. So again, it's not unexpected. We've seen gold. Gold is now at the higher. Last time we were at this level of highs we're at, it's around 1700. Last time we were here was 2012, I believe. So 8 years ago, we've not seen the price of gold this high. These are all currencies, assets that we would expect to be seen, used as safe havens when these equity markets seem to sell off. And it's exactly what we're seeing. Next, we had the oil crisis that happened after those OPEC meetings, Saudi Arabia, Russia. The alliance that they had formed has fallen through. And now we're seeing that correlated to the CAD weakening. So CAD is severely weakening. CAD's the 4th biggest exporter in the world of oil. So that's why it's going to have such a negative impact on the CAD. And a lot of the other currency pairs, when you look at them, they're going in completely different directions, and they're actually being driven buy the yen, the chuff, buy the CAD, whatever they're correlated to at that point, whatever you're trading them with. So a lot of what's going on is very explainable, and it's not things that we've not seen before. So in these situations, it's important not to panic. It's important to have patience, allow markets to develop, allow the markets to breathe. We've seen the biggest bearish move since 2008. So give the markets a couple of weeks to calm down, to develop, and then be looking to strike, executing your strategies throughout the whole of the beginning of this quarter, this year, 2020. The strategies that we trade, the strategies that we teach, I've not seen it in a good year and a half where they've been working this well with the market dynamics. They've been playing out to a T, which is why I had such a ridiculous February, biggest trading month of my career. So we have to be thinking about these things. We've had some ridiculous moves. We've banked some ridiculous profit. Now let's be patient, sit on our hands, let markets develop, and then be forming our bias for where we think markets or currencies, whatever we're looking at, are going next. So just a little thought to let's all be patient and let markets develop.